Hello, good afternoon, and welcome to our afternoon session of Why Innovation Will Not Take a Back Seat. We are joined here with my fellow panelist members, and I would like to give a introduction of who I am. My name is Susan Falola, CEO and founder of Jubix Limited. Jubix is a fintech intermediary that connects ideas and expertise to the relevant investment and funding. And we do this in a two-sided marketplace. We basically match your requirements against liquidity and actually computate how much your startup is worth over time. I also would like to now introduce my fellow panelist members. Susan Braza, would you like to start? I think you need to take yourself off mute. Sorry.
Sorry about that. Good morning, everybody. It's actually morning here in Los Angeles. My name is Susan Brazer. I'm the CEO of Lionshare Media. Our venture is, I don't know if that's feedback from me, but I think we're having a little feedback. My venture is targeted for digital transformation in the media and entertainment space. We're targeting and we're building out a new platform called Steamyard, which is going to provide new digital tools and new rules for companies.
Fantastic. Thank you, Susan. Seth, could you go next?
Yeah, absolutely. Hi. So my name's Seth. I am head of innovation at Etch Horizon. Can you hear me okay? Okay, there we go. Yeah, so we are a future-focused advisory firm. We concentrate on new innovation strategy, rapid execution, using data to drive improvement in businesses, create new value creation models, capture new value. We're kind of disrupting the big four type model with a combination of strategic consultancy and design thinking, and combining those with technology to help partners go further.
Fantastic. Thank you so much for that, Seth. Tom?
Yes, good morning, everybody, or good afternoon, depending on where you are in the world. I'm Tom Bals, Managing Director for Wrangle in EMEA. We are a product consultancy that deliver new product development and complex product engineering. And we also believe that by taking this product-centric approach and applying lean startup and agile delivery principles, we can cause micro transformations within the enterprise that then can move on from one part of the organization to the other, thus causing multiple micro transformations resulting to a bigger one.
Fantastic, Tom. Thank you so much. And we'll have our last but not least, Loretta.
We go off. Hi, hi everybody. I'm the most boring person. I'm an ex-banker. So for 30 years of my life, I was a derivatives trader. I've run a couple of global banks. I got out of banking in 2012 because I lived through the GFC, in which year I discovered Bitcoin. So I've been in the Bitcoin blockchain space since 2012, a lot in the financial technology space. They said that it's only new. I remember building a system in 1999 to take us from being traders on trading floors to up to desks. And at those days, we only had we didn't have a computer. We had pencils and pen and paper. So fintech's been around a really long time. I guess over the last 6 years, I've spent a lot of my life explaining what fintech is to a lot of the incumbents, to a lot of governments, to a lot of regulators. I'm now a bit of a thought leader in blockchain and regulations and legislation that go across blockchain and digital assets. So I write legislation and regulation for different countries about how we regulate things like cryptocurrencies, other digital assets, other asset classes. I also have a number of advisory roles with large institutions around the world on things like anti-money laundering, terrorism financing when it comes down to financial technology. I also do a lot of work with central banks now on the new buzzword of 2021, central bank digital currencies. So as I said, I'm probably the oldest person here, but I've been doing fintech probably longer than anybody else, but it's not new, and I'm glad that thanks for inviting me.
Fantastic. Thank you so much, Loretta. So I'll just try to give a brief introduction about our actual subject today. So amongst 90% of businesses around the world believe that innovation is a priority, and it has emerged as a major factor in influencing strategic planning and leads to wealth creation. Entities that make innovation be a part of the journey, making sure improvements to their services and products to compete with the latest development in the market are more likely to survive. Innovation increases your chances to react to changes and discover new opportunities. It can also help to foster competitive advantage as it allows you to build better products and services for your customers. So we're going to go into our first question. Our first question today is, what do traditional business needs to do to keep up to date with innovation, and how can these digital infrastructures improve innovation? And I'll first like to put that to Tom, and if Susan could chime in after, that would be fantastic. Thank you. Tom?
Yes,
Sorry.
yes. Well, I'm thinking, because that's a pretty big question, what to do to keep up with innovation. I think keeping up with innovation might not be the right thing to approach innovation per se. We believe in continuous development and continuous innovation, so it's much more a matter of maintaining a continuous flow. I think it's my audio indeed. Yes. So I'm going to mute myself and switch to another audio. Okay. So
Okay.
I'll pause my answer for there. Yes.
Okay. No worries. Susan, I think you need to take yourself off mute. Sorry. I'll do.
Now that we've looked at the audio, all right, here it is. Innovation is actually, I have the same audio, or it says. Innovation is actually a very big challenge, largely financially for companies. I think there's a yearning for continuous improvement in revenue and EBITDA, which is the thing that channels everybody's view of innovation. It's really hard for larger companies. I've been at a lot of major tech telecom companies, and it is very difficult to internally take on some of the challenges. But I think COVID has been very interesting with that, because the need for decentralization and some quick pivots on how people interact has really woken a lot of the IT folks up, the C-level executives up. My audio is. I think that it's. I play also. I think the audio too. I think I'm going to have to hold. Can you guys hear that? I'm not sure how I'm going to get that. But, I apologize. I don't know why. Let me see if I can come back at it. I think that ultimately innovation is an appetite for taking risk, modernizing practices to try to drive efficiency. And I think a lot of companies are on that. It continues to be terrible. Hold on a second. All right, I'm going to start to like, hold on.
No worries. Should we go back to Tom? Tom?
Yes, I'm back again. How is the sound now? That seems to be our biggest challenge. Loretta is saying no.
It's really bad. I don't know whose it is. Who's not on mute? Because the echo is really bad.
Okay.
Right. So is this better now? Yes. It might be Susan. Good. Where were we? On continuous innovation, right?
Wow.
Oh, no.
Yeah.
How to keep up with innovation. So yeah, as I said, I think it's much more a matter of continuous development and continuous improvement of products and services than looking for a single big bang all in one shot, to be honest.
Yeah. I mean, I actually, I'll just pick up. Can you hear me now? All right. Let's go at it. It's crazy. It's speaking of innovation, there's a lot of innovation in video conferencing, which is interesting because 30 years ago, I was at a company called Compression Labs in Silicon Valley, and we pioneered video conferencing. And I did the first video conferencing system for Apple, actually. And it's just fascinating that 30 years later, we're still having audio problems, but that's the way of the world. I think that, the idea of digital transformation and blockchain is a key piece. I also am on the board of Global Women in Blockchain, and Loretta, I've been involved with blockchain for 7 years also, so I'll definitely take some trading tips. I've been on the trading side, but much more so, I've been involved with blockchain as a disruptive technology for businesses and workflow. And it does seem, I'm dealing with the past 3 weeks with this NFT craze, which is the idea of, taking digital assets and getting them using auctions to create value. And I think I've gotten about 25 calls a day. So before, no one wanted to really understand this. And actually, NFTs are really interesting for me because they catalyze interest in digital assets of all types, right? Art as being a little bit of a love child this week, but otherwise real estate, cars, financial instruments, et cetera. So we're in a real movement towards digital asset monetization. And so my platform, which is a media and entertainment platform, recognizes that the technology in the 2020s is really rapidly changing. And I'm right in the vortex of recognizing that it has to come from like innovators outside of the larger companies as a service so that they can jump on board and lower their CapEx and lower their business risk and adapt a system that's third party, but yet decentralized. So it's really we're really changing music and media distribution, filmed entertainment, by introducing a mobile first immersive platform. And it's interesting because as I talk to companies like, Comcast or Microsoft's a different egg because they're really on the front line of all this new immersive technology and cloud services. But a lot of companies haven't had the in-house talent and vision and agenda actually to really build out next generation distribution systems. They want them, they need them, but they don't really have the chops inside. So it's a fascinating moment of change across so many industries. And there are some key drivers like blockchain and cloud services and other, we're looking at not only the 5G evolution, which is really in process, but also the evolution of the web, the third generation of the web. So the spatial web that's coming will enable people to interact not just screen to screen or file to file, but like into the real world. And that's going to be a pivot that most people are going to have to see from outside. So, I mean, innovation is fun. And it's going to have to be step by step, like Tom said, to the actual companies that can embrace it.
Thank you so much, Susan, for that. Can we have a Loretta? Because I could see you going NFT. I think it was in regards to NFT. So if we could have Loretta come in and then Seth come in after.
I think those NFTs, if anybody never had a crypto kitty, go and understand what an NFT is. Actually, I understand what they are. Like decentralization and blockchain is what I write laws about and regulation. But the issue is that the technology is still very early, and the scalability, interoperability. People can say whatever they want about blockchains. The only use case of blockchain at this point in time that actually works is Bitcoin. I know they've got to get a lot of comebacks at me for that.
We seem to have lost Loretta there. Seth, you would, until she gets back on, if you'd like to continue.
Yeah, sure. I'll jump in. Sounds like my audio is a bit echoey too. Oh, can you mute, Susan? Great. So, yeah, I guess just picking up on Tom's point, actually, around, the question, how do we keep up with innovation? I think there's a kind of risk there of, always looking for what's next, external to an organization. And to take the sort of Simon Sinek infinite game type mentality, if you know what your own purpose is as an organization, North Star that's way out in the future, and actually you can expand that to thinking about industries and ecosystems as well, then you don't actually need to worry as much about the competition, and you focus on reinvention and renewal of your own business model. And I would slightly disagree with the idea that continuous innovation is always the way. I think you need to partition and look at multiple different horizons of business model innovation, so that you are, of course, you have to be continuously innovating and you have to become more efficient, but at the same time you need to kind of step back from 30 years from now and imagine. I've been thinking about if we imagine the net zero targets that are coming into play, in the next 30 years, etc., even the next 10 years, or up to 2050. But imagine about what would actually happen if we did reach net zero. How would businesses operate and prosper within that environment? And so I guess my point is having different scenario planning methods, and enabling yourself to envision multiple different futures, means that you don't really need to be chasing innovation, because you've got enough to be dealing with yourself as an organization. And of course, it's good to have worthy rivals and a competitive view, but you start from your own purpose.
Thank you, Seth. And we'll let Loretta continue.
Yeah, I'm sorry, I don't know what happened. What happens when you're in a state of emergency? Your internet goes down. Yeah, so innovation, I think you have to innovate or you die. As I said to you, like, we started to innovate when we moved from floor trading in 1999 to computer systems. And I'll tell you the big tip, we at one point had the buy button next to the sell button. When people were doing those around the wrong way, we learned very quickly to move them far away from each other. So I think innovation comes, you have to also be cognizant that I learned everything in a book. Everyone above me, everyone who writes laws, regulation, learned stuff in books. We didn't learn things off the internet. So this whole generation of the millennials and under, I have a 17-year-old, and I think if I took the phone away from her hand, it's an extension of her left hand. It's a very different mindset, it's a very different generation we're living in. So innovation is happening so much faster now than we've ever seen. I'm very lucky because I didn't really understand too much about technology and innovation. So what did I do? Well, one day in about 2013, I Googled who built the internet. Robert Kahn came up. So he's the father of the internet. He built the TCP, Transmission Control Protocol, and the Internet Protocol. So I rang him up and said, Bob, I don't understand what you built. Can you explain it to me? First time he hung up on me. The second time he did it, and he's taught me to code. I learned to code blockchain across 3 blockchains when I was 43 with my then 9-year-old. And I look at what Bob did. He didn't mean to build the internet. Like he says to me now, I can't believe that this thing that I built is what it is. And without him sending a message across an open network to a lovely man called Vince Cert, which said hello, we wouldn't be sitting here having this conversation. So innovation is both. It's incremental and it's also rapid. And I think the more educated you see across people across the emerging world, I do a lot of work across Africa, across India, the masses of the populations of the world are very young. They all have access to at least one mobile device and the internet. That has totally changed everything that we've thought about in the last 30 years, even in the last 3 years. Even in the last 3 months. So innovation is absolutely skyrocketing, but I do have one belief that blockchain is not going to last on its own. The Internet of Things is not going to last on its own. AI, all these things are now emerging to become really powerful. And I think that's why this decade is so incredibly different from the rest, because you're seeing this emergence of all these technologies come into play. And it's going to be, we're either all going to die in this decade if this COVID thing continues, or it's going to be the most revolutionary that we've seen in history.
Thank you so much, Loretta. That was absolutely wonderful overview there. Let's go to our next question. With apps like Uber Eats, Bolt, and Deliveroo providing a payment gateway and access, do you see more traditional businesses as a form of intermediary or exchange going forward? Would you like to start, Seth or Susan? Maybe I think Susan might want to.
Yeah.
Seth.
Yeah, I mean, it's an interesting question. Sorry, Susan, you might have to mute again.
Oh, sorry.
Other Susan Brazier. There, I mean, I can't speak too much to that, that sector, because, I haven't worked in it directly. I think what you're talking about is disintermediation from, potentially supplier or organizations that can create kind of multi-sided propositions, and it disrupts the supply chain of a traditional business. So yeah, I certainly think that can happen, across industries and sectors, and it is. And that means what that kind of means is, I think organizations have to increasingly think of themselves as, the boundaries are slightly less solid than they were before, and your partnering strategy and the way that you actually collaborate, and even with competitors, essentially, so that the kind of net benefits of the industry are beneficial to everyone, is more important. So I guess, I kind of generalized your question, but are things becoming disintermediated? Yes. Do people need to be more collaborative across ecosystems? Absolutely.
Fantastic, Sir. Thank you so much for that. Should we have Loretta? Do you want to go next, and then Susan?
Trying to get on. So this is my most favourite topic, payments. And what does decentralization mean? So when I first discovered blockchain, the reason I did was not because of Bitcoin. I've traded every asset class known to man. I've traded commodities, I've traded equities, I've traded fixed income, REITs, you name it. And what was the biggest pain point for me ever as a trader? Not the trading, but the clearing and settlement times. How long it takes to clear an equity can be 3 days. How long it takes to clear a water entitlement is 27 days, and no one can tell me why. We have fixed income, 1 days. So in payment systems, if you're looking granularly at payment systems, when I pay myself from, say, my bank in Australia to myself in Mauritius, some days there's 3 intermediaries, some days there's 7. Don't tell me why. Sometimes that takes 2 days to get to me, sometimes that takes 9. Now, the friction in these systems has made a lot of intermediaries money for a very long time. So this disintermediation, and the reason the banks go on, they don't like things like Bitcoin, which is not currency, by the way, it's a commodity in the laws I write. These things are taking frictions out of systems, and you're disintermediating markets. When you break middlemen's positions in markets, they get very pissed off. So payments is particularly things like cross-border payments and payments in general has been incredibly onerous and full of friction for hundreds and hundreds of years. So what you're seeing now with this big uptake in things like Bitcoin, the ability to trade a cashless system peer-to-peer with anybody in the world without an intermediary, that is incredibly powerful. So, Facebook came out a couple of years or last year, and they said they were going to have their own cryptocurrency. That was never going to work because they're not going to get approval by the regulators, and it's certainly not decentralized, and it's not even on a blockchain. But the interesting thing that did to me, after that, before that, no central bank took me seriously. After that, every central bank's going, ooh, sugar doodle. Loretta, we're about to be actually rivaled to have sovereign power by a tech company. That's never happened in history before. So, so you're seeing the move towards central bank digital currencies become up and centre, because central banks understand that it's no longer just about them, that a tech company can provide everything that a bank does, that a financial institution does, so we're seeing this drive in innovation in these products make the legacy users and the legacy systems react very fast. And I can tell you, I've never seen a bunch of central banks react more so than they have in the last year. I don't think they've reacted for the last 300 years, but in the last year, they've all moved to having a unified payment system that puts them on par with something like a Bitcoin.
Thank you so much, Loretta. Tom, would you like to? Oh, Susan first, and then Tom after.
Good, Tom.
Okay, Tom.
Yeah, no, I think a lot already has been said, and what we're seeing is that by the disintermediation, we're taking out the inefficiencies in the exchange of value, and if that leads to a better customer or end user experience, I think that is something that we should embrace and welcome.
Thank you, Tom. Can we have Susan now? Susan?
I think, yeah, I don't know. Is it my? Am I on? Listen, Loretta, it's so much fun listening to you. The disruption of blockchain as a financial instrument is interesting because, just as you said, it really is going to be even further perpetuated. Any of these cryptocurrencies or these financial, I think it's all about frictionless transactions. So where I see some of the payments on the back end and on the front end, right? So some of the new banks are the telecom operators who already do microtransactional transactions for airtime on a regular basis, and they manage data on a regular basis, on a per user basis. So it's really actually one of the biggest new banks that you'll see and people don't talk about are all the new telecom operators. And they have identity management of their subscribers, even if they're on the pay for, on the kind of free to phones. So I think that what we're seeing in terms of payments is the move towards digital money is going to really actually be a much more frictionless and a much more cost effective. I think it'll be that those systems, the key challenge in all of that on top of everything else is hyperscale and interoperability, and those exchange transactions or the international kind of ability to move currency across is really going to be revolutionary. I used to work for Virgin Mobile, and in 2006, we created a card called Stash for the unbanked. And at Nokia, I worked all over the world for microfinancing. So the power of money and the power of even microtransactions, that's really at the heart of what this NFT craze is. It's an auction, but it's allowed global interaction in purchasing something in real time. So the bottom line is the validity of systems that can really prove the identity of an asset, prove that you own it and somebody else is going to buy it, kind of take in the pricing and the flexibility of the pricing on usage and value is a big move forward that not everybody gets. And again, I think it's not so much even the credit cards, like even if you have an international, credit card, like a MasterCard or Visa, those guys are in the boiler room for innovation, and either it's they innovate or die. Their value proposition is has every opportunity to kind of succeed still. It depends on some of the choices they make. In my new platforms, it's interesting because the frenzy of all these new currencies and all the reconciliation, there's one piece of it that's trading, which I'll leave to Loretta. The other piece is sort of being able to touch a piece of video, whether you're interacting with it and have the ability to transact it in a frictionless way. So instead of going through all these processes in the Internet 2.0, the two services, the kind of services that you talk about, Uber Eats and all the other, those really are Web 2.0 services where they're using older databases. They're not their old practices of verifying credit cards. The way they do are fairly kind of old school. And what we're going to start to see in the Web 3.0 is a whole new way, much more real-time transactions that have much more data in them, and they're going to be more spatially aware. And there'll be more governance, meaning knowing who's using what. So security will go up, and that'll be an improvement. And it goes up because of some of the decentralization, right? All those centralized servers, everybody in a store is getting hacked and their data's out. Some of those changes are going to be very welcome by a lot of back offices and certainly consumers.
Fantastic, Susan. Thank you very much for that contribution. We'll now move on to our next question. 1 second. So our next question is, why are innovative products or services needed, and can a product or service be truly innovative? I think we've kind of touched on that already. So we'll move on to the following one, which is what stifles innovation, and how do we fund innovation on a mass scale across borders? Who would like to first go for that? Oh, okay, Loretta, go ahead.
I'll tell you what stifles innovation the most, and being on both sides of the fences, running big businesses, running banks, and now being a regulation. I'm very lucky that I don't know how many of you have heard of the M-Pesa. The M-Pesa is actually mobile money, which was created in the 1990s in Kenya through a mobile device. It is the first ever mobile payment device we've seen. And the M-Pesa works very well in Kenya. Doesn't work in the rest of Africa, but it enabled tech companies that have phones to issue payments, transfer of value amongst people that didn't have a bank account. So this is incredibly powerful. But the problem is, and the tech companies that created it with their phones had to, because there was no regulations around technology in telephones. So regulation can really stifle innovation. You have to have the very fine balance. And I say this, because I spend a lot of time, with technologists and innovators. I'm a regulator myself. I have to talk to people that run governments. I have to talk to security agencies. And the biggest problem is that people who write regulation are generally old like me. They're not technologists. And technologists are not policy writers or regulators. So I found over the last decade of my life, the best thing to do is to put them all in a room, and whether they go at each other or they throw books, at least they're in the same room. Because we can only not stifle innovation if the regulation around that innovation can at least keep up. I'm not saying it has to be ahead, because most regulators look at me with 20,000 eyes when I tell them about a non-fungible token. They were a bit lost at Bitcoin in 2016, very lost at initial coin offerings, very lost when the crypto kitties came in, and I told them that their teenage daughters were buying and selling sort of a Pokemon of a kitten, and there was no way you could arrest crypto kitty number 3 in securities law in the US. So we've got big problems with regulations because regulations don't understand the technology. But the one thing that we learn, and Bob Kahn, who built the internet, did teach me this: the walled garden approach of the way the internet was perceived doesn't work. We all have to sit at the table together. That means policy writers, governments, innovators, technologists, because the way forward and the regulations that we need, to stop people being hurt, because we only have regulations for 2 reasons: to protect people, to protect consumers and investors in securities law, but in AML, CTF, anti-money laundering, terrorism financing, which I spent a lot of time doing, that's a much bigger demon. And we have to ensure that when the technology can be used for bad, everything's used for bad reasons, but we have to ensure that we keep out nefarious actors, but at the same time we have enough regulation to keep out those guys, but at the same time we have regulations that don't stifle innovation. Now, this to me is my biggest challenge. I'm going to keep fighting this mountain because it's the biggest challenge for the world, that regulators don't understand technology and the technologists don't understand what regulators do. If we could all just think of 3 things: we don't want humans to be trafficked, we don't want people to blow each other up, and we don't want drug dealers to be out there. If we could just have that as technologists and innovators as what you don't want to do, and the regulators don't think that all the people that are not doing that are doing that, we would have a much easier world, and we'd probably be in Web 5 at this point in time. But it's a process and it's a step, and we all have to work together. I have this hashtag, collaboration is the new survival, because if I've seen anything over the last decade, it's we need to collaborate with the regulators.
Thank you so much, Loretta. That was fantastic. It's actually really nice to hear, because you've got such a wide range of experience. So it's really good to hear from that side of things. If I'd like to take Seth, if you want to come in now.
Yeah, sure. So what stifles innovation? I guess quite often, ideas are easy. Basically, coming up with a new idea is not the hard part. I think getting new, challenging, things that would disrupt the existing business and ultimately maybe put them out of business, out into the open and properly invested behind is the hard bit, and getting execution done is the tough job. And sometimes everyone is in an organized. I'm thinking about it from a kind of corporate level. Everybody is focused on margin, operational efficiency. Too much of a backlog for what needs to be changed right now to think about what might happen in 5 years or so. And then when they do, it's just getting off to the bad start can sometimes give innovation a bit of a bad name. So if you're not doing it, you've actually got to slow down sometimes and actually explore a problem space and look at different opportunities for market entry. And it seems trite almost now, but accept that most of them are not going to work. So you're going to have to put skin in the game and invest in things that are going to produce learnings. And that's not always going to mean commercial upside. Like, and if you get 100 ideas out and one of them works, then that's a success. But you actually, the amount of time it takes to give organizations and teams space to explore and experiment and to collect enough evidence to be confident, I think is giving that space and having senior buy-in is really critical to kind of liberating innovation.
Fantastic. Thank you so much, Seth. That actually brings us into our next question. So, do investors like to invest in innovation before or after enough traction has been built? If we just start with Susan, this one.
All right. It's an interesting question because I think it depends on the type of investor you are, right? If you're an early stage investor, even early stage investors, angels, VCs, like traditional models of financing have a certain sort of rhythm to them, even if they focus on specific verticals. And I've been a venture capitalist in the media and entertainment company in Europe with the FIFA World Cup. But I would say this, I am fundraising today. And what's really exciting, especially as a female CEO of a fairly large and aggressive company, that we're building a field of dreams. We're building this kind of, next generation kind of moonshot type of platform that really has impact on all sorts of major premium entertainment. And I've done that when I've been at large companies where there's funding and you can get away with it. But when you're a startup with a lot of ambition, the traditional approach for finding early stage capital is that they want to see you have some commercial traction, some revenue flow, at least an MVP in market, some minimum viable business, so that they can get a sense of what you're doing and what your vision is. And always the mission is to kind of really laser focus in on proving out a particular use case or market value proposition. In my case, I'm kind of irreverent because I've been a senior executive at all these large companies, and I understand the challenges for them to innovate. And I'll just build on what sort of Seth said, is that, the problem is scale for a large company. When they're making some adjustments to innovation, it's one thing. When they're kind of looking at a new disruptive product line or a way of doing things or a new kind of line of business, technology or, other kind of process improvements, they really have to see it hit a bottom line. So the larger the company, the more difficult it is to innovate in some ways. In a lot of cases, they fall on it. But going back to the venture funding piece of it, I'm finding now I have enough experience actually to kind of chat with investors and be very clear about this, what the kind of sort of the focus of the of my commitment to innovation is. And so I'm finding investors who are actually willing to let me build out the platform at scale and take in a larger amount of money, recognizing that the market value proposition of growing the business and my expertise and my team will be the guys that can prove out that this is the right path. So we're doing it step by step. So I think it is the appetite of an investor. So for me, I only want a certain type of investor to match me. And as Loretta will know, that the good news is there are also, in addition to these traditional kind of VC angels, that I'm using every other kind of technology out there. I'm very involved with the new Reg CF, which is a $5 million get. Like when you're doing crowdfunding, I think it's become, the new ICO in a way. Everything has gotten very exciting. The idea of doing a digital asset fund with digital securities is part of our new alternative funding. And I'm also taking a page out of Elon Musk's group, where I'm pre-selling some of my products to potential telecom operators or content creators, where they'll pay in advance and they'll get their Tesla later. So it's the same for us. We're building relationships where we're getting development licenses, which is kind of a novel thing. And it really is, and it's really not for everybody, but is working for us. And so we have things in Japan and India. So carving out different territories is also a good methodology if you're licensing technology. So that is another source of funding that's non-dilutive and very appealing to bigger and more larger investors. So.
Thank you so much for that, Susan. I'd just like to inform our viewers that Loretta's already informed us earlier that she's having some connection issues. So please bear with the sound. I'm sure you would like to hear more of Loretta's views. So first I'd like to have Tom, and then Loretta, if you could come in after.
Yeah, sure. I'd like to mention again that I believe that innovation never stops, and that investors should be looking for mechanisms that allow the organization to collect feedback and to continuously learn from the proposition in market. And that starts with an MVP, as you mentioned, Susan, but it doesn't stop there, and it doesn't certainly stop even when a product or a service reaches scale, because again, the learning is continuous and the development doesn't stop in order to maintain a competitive proposition out in the market.
Thank you for that, Tom. Now if we can have Loretta come in.
I'm so sorry, but on an island in the middle of the Indian Ocean in a state of emergency. So I didn't have my laptop yesterday, so I'm sitting as close as I can to my router on my mobile device, but I'm here. Yeah, so I've done a lot of investing over the years. I've been an angel investor. I've always had problems with venture guys. I don't like the way they take people's capital. They take 5% equity for not doing anything. I don't like the way that they can just remove like a founder of a business out of it. There's always been flawed models. So when I looked at what initial coin offerings did, and as I said, going back to blockchain, so I spent a lot of time with the ecosystem, the Bitcoin kids, the maximalists, for a number of years, not thinking I was a libertarian, but just trying to understand what the hell they built. Now, they had the biggest problems, say, between 2010, 2014. None of them could raise money. Nobody wanted to touch them, and they're all pretty grotty. Like, yeah, they're a bit autistic. They wear dirty.
Seems like we've lost Loretta again, unfortunately. If Susan, you'd like to... Oh, 1 second. I think we've got her back. Wait, I think she's just loading up. My apologies.
Can you hear me? Can you hear me now? Yeah, there are. So the venture model, I think, has always been flawed. So when the Bitcoin guys come along, they said, all right, nobody will give us money. Our families won't, banks won't, no venture capital will do it. So what do? We create our own model. So that's initially what something called an initial coin offering was built to. So you could raise money in either Bitcoin or another protocol that's not the Bitcoin blockchain, but the Ethereum protocol. So all of a sudden they had an ability to raise money that was unlike anything we'd ever seen. So it was a digital crowd fund. Now that was really good, but then I actually wrote the first laws in the world around ICO regulation because I saw a lot of scammers doing this. Great idea. But you saw a lot of scammers come into it. Consumers were being, upset, and so investors were being ripped off. So it needed regulation. Now, the velocity of the capital raises through that has sort of died off in the last couple of years. But I think it sort of needed to. But you look at something like some of the blockchain companies I advise, and I used to be paid in cryptocurrencies because these kids couldn't afford to pay me anything else. Well, when I got my first Bitcoin at $40, I thought it was a joke. I'm not laughing now. But it's an interesting thing. So I do a lot of advising. One of the companies that I advise is called Binance. They're the biggest cryptocurrency exchange in the world. They became a unicorn in under 6 months. There's no other industry in history that has seen unicorns create so fast. Now, I'm not saying that's wrong or right, but what you're seeing out of the dot-com bubble in 2002, you saw the Googles, the Facebooks, the big companies rise out of the ashes of the crash. What you're seeing now after the crypto winter of the last couple of years when cryptocurrencies went to almost zero and everybody said that Bitcoin was going to die, and now it's at what, $60,000? Well, hello, it didn't. And you've got every major institutional investor in the world trying to work out how to buy it, and they don't know. So it's interesting that these new technologies are also being the drivers of new companies and new Elon Musks. I hope that the next Elon Musk is not in America. I hope the next Elon Musk comes out of India. or Africa. And I think with where technology and innovation is, we have that greatest opportunity to see a much broader spread of wealth. And I think if people can start to invest in projects, democratizing, I guess. You saw that thing with the Reddit. I mean, I think you've seen democratizing of investments, democratizing of money, just like the internet democratized media. So I don't think venture is going to go away, but I'm certainly not a fan of venture capital because, you get driven around roadshows. You've got to sell your soul to 20 people in suits that look at you and then say, oh, I'm not interested. I think the kids that are innovating the most are coming up with new ways to capital raise. And that's what I find really exciting. And I advise lots of these little kids because most of them can't put together a business plan and they don't clean their teeth. So they've got a lot to learn as well. But I think the world is moving to out of just, go and raise money by venture capitalists or a bank, because those old models are really failing, and we're starting to see that very blatantly as 21 comes into play.
Thank you so much for that, Loretta. So we'll move on to our next question. Our next question is, why do large investments go into research and development? If we have Seth come in here and then Susan coming after.
Sure, I'll just make an opening comment. I guess it's a super broad question. Ultimately, I guess to develop IP that can be patented, which can turn into new products, which can create better differential margins. In a nutshell, that's where the money goes. Whether that always happens is a completely different question, I think, and we've done a lot of work with businesses on the effectiveness of their R&D model and how that translates into actually higher margin generating products and services. It doesn't always happen. Spending more in R&D doesn't necessarily mean more profitable product lines and stronger performance. So I think but that's the overall intention.
Seth, for that. Susan?
First of all, Steamyard needs to do a little more innovation in its software. It's a pretty simple execution, so I'm not a fan. So I'll start with that. Audio is simple these days, so I see a lot of the innovation in this video streaming space, and the biggest issue everybody has is performance and video quality. There should be no reason we drop Loretta. So I'm just going to give Steamyard a thumbs down. So I'll move on. They need a little more R&D. I can say that because I see all of these new, I launch a lot of these new video systems, and so I'm going to say that. Nothing to the sponsor. So I would say R&D is an interesting term. Obviously there's a lot of tax credits if you get into the right zone, actually, to figure it out. The reason why R&D is a good source of why most companies put it into R&D is that they are looking for that innovation and that disruption. And sometimes they'll find it in terms of technology. And sometimes they'll find it in terms of a combination of market and technology. And in a lot of cases, in many companies, and especially mine, but it started in the model of Apple way back when with Steve Jobs. I mean, in the 80s, when I was at Apple, I was just like actually one of the people that as an advisor to me is a woman who led manufacturing at Apple, and Apple's sweet spot was working with best of class technologies and integrating them into a product like a laser writer or before the phone. There were other products like our PCs that we built using and partnering with a lot of different companies. And so part of the innovation is to kind of make open source types of innovation that are not so expensive, that people are making we've had a tipping point for sure over the last few years of collaborative production, coupled with new cloud services and the cost, and some of the Amazon tools that are so magnificent. So a lot of folks in IT can scale and create new services at a fraction of the cost that it used to cost. So I think there's been a lot of disruption in the cost and the requirement for R&D for a lot of the basics. That's the interesting thing is having people build out new open API systems and really be very flexible and agile and interoperable systems so that they can innovate in a much more cost-effective way. So the very heavy capital costs that used to be required a few years ago, which is to the delight of a lot of those investors, are now that companies can get up and running, and building out services with a lot less capital. And you see that reflected in a lot of the budgets, both at large companies and the budgets at VCs. But I'll just leave that, the movement for all the convergence of all these new technologies are going to lead to a disruption across every level of media and communications. The digital economy is going to go from 15 to 50% of the world GDP. And a lot of the issues in payments, a lot of the issues in security, in digital asset workflows, a lot of the money and ROI for most companies that can make innovation choices will come out of improved ROI from a lot of streamlined efficiencies by disintermediating these middlemen or older systems. In the United States, we have been pushed to the brink for COVID, and I'm sure it's everywhere, that kind of all those big companies like Deloitte and IBM and everybody who's kept smart cities and government functioning over the last, 30 years, kind of they're the cat is on the roof, meaning that a lot of those systems are failed and old and are not efficient, right? And so that's all the way back to the back end, but really it's a front end, and database management is. So I think the move to decentralization is probably the most pivotal thing, and that means remote workers, remote security, transactions being completely down to the phone. So I think I think that's going to be the biggest change in how we work and how we process innovation as well.
Thank you so much for that, Susan. We're going to move on to our last, but not least, question for the day, this afternoon. So the last question is, how can we make our product and service chain more responsive to demand fluctuations? And I'll first like Seth to answer that. Seth?
Yep, sure. So on this one, how can we make our product and service chain more responsive to demand fluctuations? So I guess I'd love to hear Tom's thoughts on this partly, but also I think basically having scalable infrastructure and services and talent are three different ways that you could do that. So if it's demand on the tech side, then obviously as organizations are able to get their cloud strategy sorted out, they're able to spin up and stand down services as and when needed based on demand. Then that's a big part of more performant infrastructure. The other bit I see in the question is a bit more around a kind of the operational overhead to deliver products and services, especially when big events like a pandemic happen, for example. And I don't really know the answer to that, but I guess from our perspective at Horizon, we think about our organization as being part of a network of partnerships and being able to scale up and down resource, being able to get our tooling around talent intelligence up to speed so that we can actually move quickly if we need to build a team or scale a team or actually scale down. And working to kind of measure that and keep an optimal balance is pretty important, and that's from the kind of supply side. So yeah, that's my 2 pennies.
Oh, sorry. Thank you, Seth. Tom, would you like to come in?
Yeah, I think a lot of that flexibility comes from the nature or the ability to build an ecosystem around your core services. So if you have a good understanding of what the essence and the core of your own business is and focus on that, and then extend either capacity or expertise through partnerships and building that ecosystem, then automatically that builds in that flexibility to respond to changes in demand, as you said. So, yeah.
Thank you so much, Tom. And now could we have a Susan, and then if we can go to Loretta last but not least. I don't know if Loretta actually heard the question, but I can repeat if she hasn't. So Susan?
Actually, forgive me, can you just repeat the question? I'm sorry.
No worries. 1 second. So how can we make our product and service chain more responsive to demand fluctuations?
I mean, everything real time. So I think that one of the ways in which everybody, if a system gets more intelligent and anticipative of what who's using what and when, it learns, it self-learns. Our systems will use AI to anticipate, even down to a personal level, what people's usage are, where they are, what their daily. These systems will get smarter, so it will aggregate demand, and then it will actually intelligently feed into inventory if it's physical goods or if it's distribution. So I think that AI is going to be probably the most pivotal self-learning and have the highest impact on efficiency, certainly in terms of demand, and supply reconciliation for sure. It's going to be just phenomenal how it's going to change things.
Thank you, Susan. And Loretta, if we could have your closing remarks.
Okay. I'm so sorry, but I'm huddled over my router. I don't know if you can all see me, but I'm squatting on my floor, like huddled over my router. This is ridiculous. So I think the one thing, if we look at all this, for me, the biggest problem for large institutions since the inception of the internet was underestimating the customer. Customer is now centric to every business that we do, whether you're banking, insurance, delivery of food, and you don't have to be wealthy to be a customer. You can be poor as hell, but you have access. So every customer is as important as the next one. You need to understand what your customer wants and how you wanted to deliver it. So I think efficiency of delivering your goods and services, and making it the most attractive to the consumer, because no longer do we have businesses that are just sort of set in the ways. I mean, I think we were talking about Steve Jobs. Yeah, I remember in those days everybody thought he was a bit of a freak. I get that a lot, so I understand that. But it's how do you disrupt business models? You do it by getting cocky and not understanding what your consumer needs. So how did BlackBerry go? I'm going to write a blog one day. BlackBerry versus Apple. How the hell did BlackBerry go from having 95% of market share to where they are today? That was stupid, absolutely stupid. So I think as the consumer becomes more and more every business consumer centric and more focused, don't get cocky and don't underestimate that you have to deliver your service or product faster and better than anybody else.
Thank you so much, Loretta. So we've come to the close of the event today, and a lot of things that we talked about today, is something that Jubix is actively trying to mitigate. So please do definitely check out www.jubix.com. And thank you to all our speaker panelists today. I think you've given fantastic contributions, and I would just like to say a big thank you. And thank you to all our guests also for participating and offering their comments. So have a lovely afternoon and have a lovely weekend. Take care. Thank you, guys. Cheers.
Sorry about my internet connectivity, everybody. I apologise.
That's okay.